Gimpa, in charge of finance.
Kweku Kankambwedu, Gimpa, internal audit.
Michael Tete, University of Ghana, finance officer.
Krobi Asante Kotoko, University of Ghana, finance. I'm Krobi Asante Kotoko, University of Ghana.
Michael Agansisa, University of Ghana.
My name is Sibilia, Accra University in Mogadishu, Chief Accountant.
Abdul Gimba, Federal University in Nigeria, Bosa.
Usman Balabello, Federal University Dose, internal audit.
My name is Ben Okonkwo. I'm the Director of Accounts for Bosa, African Investor of Science and Technology in Abuja, Nigeria.
Bismarck Uswedu, KNUST, Finance Office.
Canadian KNUST audit.
Moses Tsikwe, KNUST internal audit.
Charles Nsia, accountant, KNUST.
Kwamnampong, accountant, KNUST.
David Wagwelenze, accountant, Ndeje University, Uganda.
Mrs. Balogun Christy Olamide from Adekunle Ajashi University, Nigeria.
Kawasima Christine, Chief Internal Auditor, Uganda Management Institute, Uganda.
Shegun Ajeibe, Elizade University, Nigeria. I'm the Bosa.
I am Bankole Binga from Elizade University, Internal Audit, Nigeria.
Isaac Owusu Amponsem, Finance Officer, Valley View University.
James Owusu, Valley View University, Deputy Finance Officer.
Hi, my name is Nana Osekufo from Valley View University, Internal Audit.
Frank Kampofo, Ghana Baptist University College, accountant.
Kwakuadu, Garden City University College, audit unit.
Good morning. I'm Emmanuel Owusu, Director of Internal Audit, University of Cape Coast, in Ghana.
Good morning. I'm John Azure, University for Development Studies, Temale, the original African.
I'm Bodi Danso, Directorate of Internal Audit, UCC.
I'm Albert Abdullahi, Director of Finance, University of Energy and Natural Resources, Sunyani, Ghana.
I am Kojo Boache Ejin, University of Energy and Natural Resources, Sunyani, Internal Audit.
I am Simon Dambeki, Deputy Boss at Benue State University in Makurdi, Nigeria.
Good morning, everyone. I am Celestine Sawan, Director Internal Audit, Benue State University, Makurdi, Nigeria. Thank you.
Good morning, everyone. My name is Awuhie Ebewele. I'm the Project Accountant, Center of Excellence in Reproductive Health Innovation, University of Benin, Nigeria.
Good morning. My name is Daina Sari, University of Cape Coast, Directorate of Internal Audit, Ghana.
Good morning. Please, I'm Athana Nobin, Directorate of Internal Audit, UCC, Ghana.
Felicia Ayuwu, University of Port Harcourt, Deputy Bossa, Project Accountant, C4.
I'm Ethel Kai Oko, KNUST Internal Audit.
I'm Charlotte Say, KNUST Internal Audit.
I'm Patience Sioron, Benue State University, Center of Excellence, Center for Food Research and Technology, Nigeria. Thank you.
I am Anab Anama Tulum, Project Accountant at the University of Ghana.
Kwame Dubuati,
Finance Officer, Accra College of Education.
Edwin Harcourt, University of Port Harcourt, Nigeria.
Suleiman Idrisu, Principal, Tamale College of Education.
Marian Nano, Wagbep, University of Ghana, Accounts.
MFA Ajadu, Accounts Officer, Wagbep, University of Ghana.
Haruna Ubaida, Tamale College of Education, Internal Audit.
I'm George Mbawini, Finance Officer, Accra College of Education.
Okay, thank you so much. Now that we have gotten to know ourselves, okay, one more.
Well, I'm Felix Boateng from KNUST.
Okay, thank you so much, Felix. Now that we have gotten to know ourselves, I think it is time for me to give the. You also just came. There are some people who just came. If you have not introduced, we want to know ourselves. Okay. Thank you.
I'm Kwabna Jun for University of Ghana.
Okay, you're welcome, Kwabna. So now I think the time is right for us to have our first presentation. And to help us with the presentation, I think I earlier on introduced him. But what I can just say briefly is that we have a very experienced person to take us through this section. He's currently the president of the Institute of Chartered Accountants Ghana. So if all of us, I know most of us are chartered accountants in Ghana here. So if we have our president, no other person than our president to take us through the workshop, we should know that we are going to indeed enjoy the workshop and we are going to get whatever that we require. So I won't take much of your time. Let's welcome Professor Adom to the podium, and then he begins.
Good morning. Yeah, I'm happy I'm meeting my people. At times when you go to a place and you start, they ask you, what is debit? What is credit? But it's not easy. When I started with ACCA before coming to ICA. My first exam, accounting. After our time to secondary school, you have to finish Form 5. And then you go to 6th Form, 2 years. And I've done accounting to a highest level. So my first attempt, no way. The first question, 5 months, what is debit? What is credit? I'm not going to ask you. I'm not going to ask you. If I ask you what is debit, so somebody say debit is your left side of your credit is your right side. Well, what is debit? It's not easy to define it. That exams, I tell you, I couldn't pass. If you look at the questions, they were all familiar, but I couldn't pass. We take things for granted. I'm this, I'm this, I'm this. But there are some basic things we don't know, but we think we know. So I'm happy all gathered here, audit, finance, so many, we are all the same. So it's a discussion stage. I'm just trying to lead. You see, so if there's anything, come in, then we all discuss. At the end of it all, we want to achieve one common objective. So I'm not teaching, but I'm just leading. So this is what we are going to look at, the introductory aspect. And then you look at the traditional role, and look at your 21st century role. You come out with qualities, but we come out with the qualities before we come to 21st century role. Challenges facing accountants, and then you conclude. My conclusion will be our understanding. It's not something new. You all know what the work we are doing here. And before we come to the introduction, let's look at some of the titles you use in our various offices. Some say finance officer. some say accountant. And I learned people are calling themselves financial accounting and then reporting officer, revenue assurance and credit control officer, treasury accountant, management accountant, cost accountant, revenue assurance accountant, chief dealer, finance director, chief accountant, financial controller. The same debit and credit. And look at the names you are giving ourselves. Even when you were introducing yourself, you could see the titles you are using. But as far as this workshop is concerned, you are going to combine it, whether you are a finance officer or you are accountant, you are all going to be one person. In actual fact, if you are going to details, finance officer should be different from, not this workshop, the finance officer should be different from accountant. I say, not all finance officers are accountants. I say, and not all accountants are finance officers. But within our environment, we've combined it. We have some people who have done MBA finance. They have never done accounting. But they are in a various high position as far as finance is concerned, and they are performing finance duties. But if you ask them what is depreciation or others, they can't answer. And we have accountants who have finished ICANN. I mentioned ICANN because I was there last month. Yeah, when they have their meeting, I was there. Imagine ICAC. ICANN and ICAC, we are brothers. And then Benin people too, they were there. You see, they've qualified, but they don't know treasury duties just because they haven't learned finance. But for our sake, whether you are a finance officer, finance manager, finance director or not, you can be an accountant. So let's combine the two, so the two become what? One, like marriage. So having known this, let's move on to the introductory aspect. When Maxwell was talking about the role of an accountant or finance officer. This time it's fading out, the old one. You had a situation where if you're a finance officer, you are at the back office. And then all the documents go to finance officer during our days. You see papers, files, heaping. And then you are even afraid to ask questions. But this time it's now redefined. The world is changing. We too, we have to change, and we are changing. And that's what the introduction is telling us. Technology is coming in. And if we don't change, our work will be irrelevant. Gone are the days where, when I started working around 1982, my table was from this place to this place because I was using 21-column cash book. You have to turn the cash book and give the headings. I think those of you who are a little bit old will bear me out. Give all the headings, about 21 headings. So when you write a description, you have to travel from your table to the end before you can record it. And after that, you draw up a trial balance, a long way to go. By this time, you remember, eh? Meanwhile, there will be a flute sitting down there. Immediately you make a mistake, then you use it to rob it. So those functions are redefined now. If you don't change, the system will change you. If you don't go with the system, then you'll be left out. Because of what? Technology. Now when it comes to performance management, because we are using the AAU system, when we are even appraising the business or individuals, you have to use some fast appraisal forms, fill it, go to one person, another. Now it's not like that. The system is changing. The reports we give, we hammer on important areas. So the system is changing us. So if you read, it will tell you about the introduction. Now let's come to the traditional role. I will be moving fast. So if you have any question, it's interaction, then you discuss. You know, accounting in general, let's go back to classroom. There are 3 main types of accounting. I would say 2, but we call it 3. We have financial accounting and management what? Accounting. Normally we add cost accounting to it, but you bear me out that cost accounting is a son of management what? Accounting. It's part of our management accounting. Because cost accounting is just coming out with cost control and cost reduction, calculating cost per unit, feeding the information to management accountant to take decisions. So in nutshell, I would say there are 2 main types of accounting, which is financial and what? Management. And if you go back to our classroom, you can see that management accounting is internal, whereas financial accounting is what? External. Internal in such a way that is taking decision internally. The information they gather, they take it internally. And the management accounting should be able to assess that this department is performing better than this department. That's management accounting. It's talk about the system, the process, you see. And then the end is decision making that is, utmost important. Cost control analysis. How you are going to change the system so that you can improve both costs and then the system, and that is management accounting. But when it comes to financial accounting, that is external. You report once in a year, and based on historical what? Data. At times, some of these companies, recently things are improving. You go to an audit, I have small accounting firm, you go to an audit, we are in 2018, and you go and audit 2014 accounts. And if you are not lucky, the people who prepared accounts were not there. After the audit, what are you going to use the information for? The information is dead and buried. You cannot account for its resurrection because the information is past. You see, my management accounting is current and future. You see, and mainly when you say traditional role, you always cast our mind under financial accounting, because financial accounting is what outsiders also see what is going on in the business. If you prepare management accounting, because it's internal, it's for internal what? Consumption, management, workers, and I would say for the worker, the entire management. Those outsiders will not see. But if you prepare financial accounting, it's for external people and then internal. But mostly we don't use it more internally when we have management accounting system there. We have our shareholders, we have the government, we have our bankers, we have what have you. These are the people we pay the account for. And it's statutory, we have to file accounts as Registrar General Department every year. We have our timelines where we have to file accounts. So it's compulsory, you have to do it. And after doing it, what next? The tax people will come in based on what you have prepared. Then they tax you. They don't base on the audited one, they base it on what they can get from your records. So if you are saying you are accountant, you are manipulating and get a small profit, you know, profit, tax is based on profit, they will come out, and then allowable and disallowable, they come out and then tax you. You see, so it's meant for external users most. So when it's a traditional rule of financial accountant, the first thing is preparing financial statements. Of course, what are the components of financial statement? I think there are 5. The first one is financial position of the company, financial statement. That's what we were calling it, balance sheet. This time they are changing things. Our days was balance sheet. They say the statement of financial what? Position. So we have to follow them. Then the next one is profit and loss account. Now you call it what? Statement of what? Comprehensive income and what? Oh, IFRS people. Statement of what? Comprehensive income. Our days. And then come to statement of what? Cash flow. Our days, it started with application of what? Funds, and then came to cash flow statement. Now they brought the statement back to say statement of what? Cash flow. It's changing. So you sit down there and say, that's why I'm saying that it's dynamic this time. Accounting is dynamic. Finance is dynamic. So as the system is changing, you have to change yourself. People are attending workshops, CPDs, and if you think you have money and you won't change, then it will change you or you will be left out. And then you go straight to changes of equity. Most of the time, the changes in equity is part of the income statement. And then the last one is knows that form part of what? The accounts. That is the most important one, which IFRS is in compliance. You have to go by the nose. And the nose, a lot of nose are tied to these statements. And that is the preparation of a financial statement. And at that time, it wasn't IFRS compliance. So just prepare your nose, get some more figures to support the figures, and you are gone. So preparing financial statements starts with collection of business and financial data. Accountants are armed with the knowledge what information to store in what file. This is the traditional rule. Preparing accounts. Currently, you also prepare the accounts, but if you look at the accounts you are preparing now, and you compare it with the accounts you were preparing some time ago, you could see the difference. Now, if you take a company financial statement, you can count the pages. How many people read the notes? You have to disclose this, disclose this, disclose this. My company, about 48 minimum. You see, who would take time to go through all these things? But say you have to disclose it. Disclosure of everything, especially related transactions. If you are a criminal, you have to show it. So the preparation of accounts was the traditional role of financial accountant. Tax planning. These days things are changing. Gone are the days where accountant, when you finish your preparation of accounts, you have to prepare a schedule for tax 2. So you are a tax, the computator, and at the same time, the accounts. You bring out a data for tax, so that when you go to Ghana Revenue or Tax Revenue Office, they will look at it. At times they look at the person who prepares it and then they accept it. Or they go through again. At times personality counts. They say, the person who is presenting the accounts, oh, this man, okay, it's okay. They too, they don't want argument, because if they they go into details, most of the accountants, they argue with the tax people. So most of the time they look at the person who prepares the tax, whether to accept it or not. But of course, there are certain items they have to add back. That is non-what? Cash transactions. That one is accepted. So it was part of the duties of the old accountants or finance officers. And then cost savings. That's the area where you are working tirelessly, reducing costs. Accountants are conservatives. You see, there is no voucher you send it to accountant and you will try to reduce it. Whether it's genuine or not, you make comments on it. And that's why the time when we were sitting at the back office, but once it goes to the accountant, the first thing is it in the budget? Yes. The fact that it's in the budget doesn't mean that I should sign for you. And you just put it on the table. You know the system. It will be on the accountant table. By the time you need the document, it is lost. You have to go and prepare. If you don't take care, there's one transaction you prepare about 5 vouchers before it gets to the cash office. And that's what we were doing there. And say accountant can help a business minimizing costs through cost and marginal accounting. Cost accounting, the assessment of cost of production. You know, when you talk of cost accounting, mostly you are relating it to cost reduction or cost control. That's objective of cost accounting. Cost reduction and what? Cost control. Are they the same? These are the questions you set in ICU. And you suffer. You see, cost control is making sure that the cost or the figure is within the budgetary what? Limit. You see, you have made provision for it, so it's within it. And you are making sure that it won't go beyond what you have planned for. You want to buy this computer, you have made an estimate that this estimate is 2,500 naira, and you bring 3,000. Should I approve for you? No, I have to control costs. So what is the budget saying? The budget is saying that it's 2,500. So all what we are going to do is that go and find a computer which will be 2,500 naira. You are controlling cost. But when it comes to cost reduction, even though it's 2,500, you are making an effort to pay less than what? 2,500. So can't you get a place where you can get it 2,000? You see, that's why normally we ask for 3 invoices. Go and bring 3 invoices. But I tell you, this time, modern, even if you ask 10 invoices, you can get it from one drawer. So the World Bank, your system, so you have to get procurement. Am I lying? Get our 4 invoices from different, you just get to the office, put the drawer. This is also enterprise. This is, we will just get it for you. You see, that's the old system. You see, so cost savings was one of the main objectives of an accountant or finance officers at that time. I'm not saying that it's not objective now. It's one of the objectives. But detecting high costs or fraudulent transaction is more easier these days than our time. When I say our time, I started work in 1982, so I've been through the system for a long time. Auditing. Auditing is a separate department. But as an accountant, you are the first person to do audit. When it comes to you, you know the audit, you know accountant can turn to what? Auditor can turn to what? Accountant. When I was working with SNET, I went there as an accounts manager. In the long run, before I left there, I was the chief internal auditor. You see, so the same qualification, provided you've gone through the training process, the same thing you are going to, the work is not the same, but you have the same idea if you have gone through the practice. So as an accountant, you are saying that sorting out irregularity that can take place, you can do it before it even goes to the audit. Some of the places, it comes to account department before it goes to audit. Some places, it goes to audit before it comes to accounts. Irrespective of the process, as an accountant, even if it has gone through the audit process, when it comes to you, you have to also open your eyes and make sure that things are in a proper position. So that's our traditional role. Now, what about the role in the 21st century? Before we come to 21st century, let's discuss it. What are some of the, I'm a teacher, so I'll go back to what I've discussed. We've started by saying that things are changing. So accountants or finance officers, you have to also change. If you don't change, you will leave you out. Because I know some people who have been in one position, and then they are there, and these small boys, they qualified, you teach the boys, and now they become your head. You see, it's very painful, but because you are not changing. If you are not changing, the small boys and girls you have taught, they will come and be your head. And at that time, you can't move. You are not marketable, you see. So things are changing. So let's also change ourselves. That's the introductory aspect. And why is such change? The change has come because of technology. Things are changing. You can sit down and then your trial balance will come up. Unlike the old days, as I was saying, you have to prepare 21 column before you extract the summary. And then even there's a PESWA. You have to look for it. That time you were not using, calculator. You have to look for it through your own calculation. And you can, one page, you can be on it the whole day. Things are changing. Traditional role. And we are saying that the traditional role of an accountant, preparation of financial statement. This financial statement, even though we still prepare, is different from what we were preparing at that time. Tax planning was one of our main jobs. At this time, we have tax consultants, separately from accountants. So if you finish, you just give to them, they do it. When the tax revenue officers come, just tell them that go and see my consultants, and they will deal with you. But olden days, it wasn't like that. Now you are accountant and at the same time, auditor. Anything that comes to you, you have to make sure that you verify it before payments are effected. And the last one was that you are cost saver. Anything you have to go through and make sure that there is cost reduction and cost what? Control. Now let's look at the 21st century role. Say in today's, accountants play a varied role in business. Traditionally, their role was to maintain financial information in an organized manner. Now, accountants also analyze information. So if when you come down, say the modern day accountants are equipped with knowledge and expertise to handle a wide number of roles through what? Accounting. Why the change from old tradition to the new tradition? And if you can see, there's international what? Commerce, globalization, multinationals. They are moving from, in these days, the China, and they are taking over Ghanaian industries. I don't know Nigeria too, they are there, but I don't know. I don't know. I know Uganda too, they are there. The little I've read. Not only the Chinese people, the foreigners in general. You see, Ghanaians also, you are also going somewhere. Go to Nigeria, you see a lot of Ghanaians. Cote d'Ivoire, you have in Ghana town, and East Legon, the main road, you call it Lagos Avenue. You see, you are moving, and they are coming. Moving and what? Coming. So things are changing. Things are changing, so accounting also needs to be changed. And then industry and business transformation. Apart from people moving up and down from country to country, the industry, individual industry too, are transforming. Now insurance industry, I'm working in insurance industry. If you look at the way that industry is transforming, when I came to insurance industry in Ghana, the insurance companies were about 8 or 11, up to 11. But now, non-life alone, what we call it general, is 28. Non-life is 22. And small country like Ghana, you have about 52 insurance companies. And as for brokers, they are more than even 500. And then agents, about 6,000. And you're all fighting for what? This small business. So it's not only insurance. When you go to banking, you see, you look at how banking industry is growing. That one too, the same thing. You have a lot of Nigeria banks here, and you have a lot of Ghanaian banks also in other countries. Things are moving up. Things are moving. And then, aggressive stakeholders. So we are just finding out why changes are occurring. And we have discussed that because of globalization, because of industry transformation. And then we have aggressive what? Stakeholders. When you say stakeholders, there are so many stakeholders here. I'm not working here. I don't have any personnel in this building, but I'm a stakeholder because I'm benefiting from it, even though I haven't contributed anything. I'm staying around this area. The environment has brightened, and that is the benefit to me. Now you can point to somebody, or when you get to AAU, my house is just at the back. I'm a stakeholder. But you have some people who also has their stakeholders, but they have contributed financially. They are called what? Shareholders. So there's a difference between stakeholder and what? A shareholder. All shareholders are stakeholders, but not all stakeholders are what? Shareholders. Shareholders, they have contributed financially. So they are benefiting from financially and at the same time from other services. So the aggressiveness, if you are in this environment and things are not going well in this university and affecting the people around it, I mean, they will come out. So that's the aggressiveness of stakeholders. And then we have the adoption of financial and operating reporting requirements. Adoption of financial and operating reporting requirements. For example, IFRS has come. And IFRS has come. Before IFRS, individual countries were using their own standards. Ghana, we are having Ghana Standard Accounting Board, GNSAB. So all the principles and guidelines were Ghanaian. Benin were having theirs. Ugandans were having theirs. But now we come to form one standard for all countries. So the requirement is not coming from only Ghanaian environment, but it's coming from other world too. Because of uniformity, you have to follow it. So if you are accountant and at that time you are using OO system and you won't change, then the system has to change you. So the reporting requirements is one of the reasons why things are changing. Then you have expanded regulatory oversight. Expanded regulatory oversight. Now, especially these accountants, when you come to ICA, we are the regulators of accounting in Ghana. We have assurance services who go around like auditors. The work they have done, they go through and make sure that the correct procedures were followed as prescribed. Now we've heard about the crisis in the banking industry. You are just sitting down quietly, and then people are making noise. Where are the accountants, auditors, who did the job? You see, you could hear about 7 banks being followed up, and they are blaming accountants. Why? Because you didn't do a regulatory well. That's what they think. And because of that, ICA, you were forced to set up a committee. Because if you don't come out, they will just condemn accountants. So whether the committee is true or not, you say you have set up what? A committee. As to when the report will come, is another thing. You see, the way the public was bashing us, some of you heard it. If you are accountant, you are even afraid. And in my office, I receive about 5 media men women at the same time a day. So quickly, God gave us a wisdom. You should come out and tell the public that we have set up a committee, and we are going. Actually, we have set up the committee. Yes. So we have called them. Why? Because of regulatory aspect. First, who was regulating accounting? Nobody. You just prepare and then send it. You cook the accounts. The auditor will come, send the auditor to lunch 3 times a day, and then just go away. But this time, you can feed the auditor. Auditor will prepare the accounts for you. Somebody will come and look at the auditor's work, because the regulatory requirements from outside is coming. The requirements. They come, what is the engagement letter? What is the letter of representation? What is this? This. If it's not done, then you'll be in trouble. So the committee you have set up, in fact, it will come out. It's a matter of time. The draft report I have read, you have to come up, you see. And these are some of the reasons why accounting or financial reporting is changing. If the regulatory aspect is not there, every firm, everybody call himself accountant will do whatever he or she likes. Diverse customer and employee behavior. This time the employees too, they are very aggressive. Then you ask yourself, what has it got to do with accounting? Accountants are now, we have to make sure that we are also fund managers, making sure that the employees' entitlement and others are invested well. And if there are certain things affecting the employees, we are not doing it well, they become aggressive. Now that we have tier 1, tier 2, tier 3, or tier 4, tier 5, and some are for employees, they always come out with a form of unions and others. You go to a place, you have about 3 different types of what? Unions. What are they doing? They are all fighting for one aim, the welfare of themselves. And normally when there's a strike, the first place they go is accountant. I'm telling you, you are paying the remuneration, you are having the money, and they think you are just covering the money. But you know, some of these accountants we have, you have never even seen a check before. We just process for people to write the checks, and then you call payment accountant, receipt accountant, processing accountant. If you are not lucky and you are just a processing accountant, you process, nothing will come out. You see, so the aggressiveness of employees is forcing accountants also to change. Because you come to a situation where accountants, you have to work with the employees to know their needs so that you can move forward. So that one is another reason why they are changing. And then you have increased risk. Increased risk. There are so many types of risk. But here, let's look at how to manage risk in terms of even that's management of risk. Interest rates are moving up. What again? You have exchange rate. All these things were not done by the old accountants. But now, if an accountant and there's an interest rate, the investment, you have money, whether to go in for T-bills, whether to go in for fixed deposit, whether to go in for commercial paper, whether to go in for bankers' acceptance, all these things are determined by what? Interest rates, and then the security of that particular product. So, because of the increase in risk, the nature of accounting duties are also what? Changing. Oh, it's not coming. So if you look at these reasons, then you can say that we need to change. What are some of the reasons you have just mentioned? Number 1, globalization. Number 2, technological, industry transformation. Aggressive for stakeholders. Yes, now I can see the response is very good, so you are listening. Before we go to the main modern duties, let's go quickly to the qualities of modern accountant or finance officer. The qualities. I did this one. The qualities. So on average, the accountants must possess the following skills at a minimum. So we are going to mention them and discuss them. If you're an accountant and you're not possessing, we are going to mention about 10, and you are not even one. In one, then you have to advise yourself. The first one is financial management and accounting skills. You should have financial management and accounting skills. Initially, I was telling you that being a finance officer does not mean that you should know accounting and then you know financial management. But once you are a finance officer and there is no division between you and finance officer, then you should know the two at the same time. So the role you are going to look at, you could see that at times you are playing the role of a finance officer in the real sense, and at the same point, you are playing the role of what? An accountant. Because as a finance officer, you are everything. So you have to get the financial management skills as well as accounting what? Skills. The next one is budgeting and financial forecasting skills. Budgeting and forecasting skills. Budget and forecast are not the same. You forecast and get a figure and put in the budget. So if you don't have the skills and you are preparing the budget, you go to the old tradition. Last year it was 20,000. Let's add 20% to it. So all the items you add 20% to it. Meanwhile, last year you bought a generator. So you are adding 20% to it. So that next year you have to buy what? Generator. You know how the traditional system is. Let's prepare it and then add 10% and then move on. And you can see that there are some items which are one-off transaction. It won't reoccur again, but we have added 20%. So when you get into the end of the year and you look at our budget allocation, you budgeted for 120. Now you have spent 80,000. You are in November, 1 month more. So what do you do to absorb the money? There you see, when I don't want to mention names. You see a lot of seminars going up and down, and then every afternoon you pass a place, you see some envelopes, and then the bags carrying food and others, because the system is such a way that if you don't exhaust the current one, next year they will take it away, and you can't get another one. So you have budgeted for something you are not supposed to. That's what we are saying, that you have a budgetary and forecasting what? Skills. The next one, a self-starter who is organized, disciplined, and goal-oriented. It should be like a starter. You see, self-starter. Take yourself that you don't know anything. You organize yourself. It should be disciplined. And then you should have to know the goal you want to achieve. It's very, very important. You just get up in the morning, you go to the office, the routine work. What do you want to achieve? You're reporting, you are in November. On quarterly basis, have you brought out third quarter report? Is your goal? These are some of the things you have to set up. If you are reporting on quarterly basis, then you set a goal. 15 days after the quarter, I have to come out with my report. When you are in November, ask yourself, this one self-assessment. Is your third quarter report out? Today is 28th. Have you even started your budget for 2019? Because according to Ghana Constitution, budget should be read 1 month before the end of the year. The whole nation, what about the university you are? Even when you prepare the budget, who cares? Once they want you to pay something, they will be on you, and then if you don't stick to your guns, the budget will be thrown out. So you don't see the need to prepare what? A budget. Or what we are saying that it should be goal-oriented person. What are the goals you want to set? So if you are just a finance officer, you are just an internal auditor, and then the whole year you haven't come out with your any report, ask yourself, what are you doing? So to be at pace, you have to make sure that you have a goal to accomplish. You should have good working knowledge of information technology. That's the problem now. When we started using computer, we were calling it Lotus. Where is A, where is B? Then your hand is going up and down. When you make a mistake, then you shout for somebody to come and correct you, or else you can easily press escape. You have to go through processes. An accountant, as I said, most of us are conservatives. You don't want to change. Even now, some people are finding it difficult to use computers. Excel is there, advanced Excel. You can use it for diagrams and then, but do you know how to use Excel? Just ask yourself. You say, so because of the technology aspect of it, you have to make sure that we are abreast with what? Time. And then the next one, good analytical and reasoning skill. Analytical and reasoning skills. Don't make yourself like a boss. Everything you give to subordinates, they have to do it for you. You should be able to analyze your own report and then explain it to your superior, the management in general. You do that. You are in a small corner, and then you work as and when they give you work. Why don't you find some work to do yourself? So how to analyze things is one of the main qualities of a good accountant. The last one I have here, good leadership and supervisory skill. Good leadership. You are just an internal auditor, deputy finance officer, and you think you are not the boss? No. Trust yourself, you are a leader of yourself. Should be able to lead. And when you come to the modern ones, you see that every accountant is a leader. Accountants, you have position. If you don't move, the whole university will not move. Cases which have been happening in University of Uniba University and others, all the time, accountants' names are raised first. Just because at times even the vice chancellor should come and beg you before things can work out. Why don't you exercise that skill? That does not mean that you could be conservative. If it is due, it should be processed. But nobody should come and then put his authority on you. So as a good accountant, it should be a good leader. It should be able to supervise. Most of the time you get a lot of cases, not caused by us, but our subordinates. By the time you realize the money has been taken or chopped off, and you accountant say, go on leave. Then you go on leave without returning. You say, because we don't supervise. How many times have you called, at the beginning of the year, have you asked your subordinates to prepare action plan themselves? what they want to achieve. Even though you have organizational goal, they have job descriptions. Ask them to come out with their own action plan, what they want to achieve, then you discuss. So that at the continuous interval, you can ask them performance evaluation. Have you ever done that? The work they are doing, have you ever evaluated the work they are doing? By the time you realize things are already what? Gone. So you will be in trouble. You should have known better. That's the word when they use on you, very, 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 very bitter. You should have known what? Better. The person you trust, the person you have relied on for a long time, and that person one day, it comes out, is doing something contrary to the rules and regulations, and the first person to go is you, because you did not supervise the person very well. So some of the qualities, even though we are mentioning them as if you are in classroom, but you have to take notice of them, and at least somebody is working under you, try to know the work of that person, and make sure that you move with that person, anything he or she does, you monitor it. So these are the qualities I have here. Any question for discussion? So far, we have been able to go through the introductory aspect. The world is changing. Accountants, you have to change. Even your dressing, you have to change. The reasons why there's a change, you have mentioned them. We have come to a position where the qualities required from every accountant you have discussed them. So if you have any question, you can ask. Any question? Yes, sir.
My question is, like what you have enumerated here, some of the accountants they have, but just for access will not allow them to practicalize it in where they are working.
Some like what?
Like the budget that we have.
Mm-hmm.
But the conditions say that maybe we are supposed to buy a certain item, and that item is not in the budget, and the accountant will insist it. But the big man at the top say that without this, then how can we run this organization and other things? So what should we do? Or are you truncating my orders and other things? So at times, it's
you see, at times you should not be too stiff. Even though sit down. Even though the budget is there, you prepare a budget, and at times you have some figure for any emergency or any miscellaneous. But it can come to a situation where you have not budgeted for. The circumstances at that time needs to be what? Consider that one. That's why at times we reallocate some of the items, and then, but if that particular thing is not a priority, from my experience, it's not a priority, and because of self-interest that the person will get, so he's putting pressure on you to process for payment, then you have to advise him very well. It's not easy. I know it's not easy. The same person going to promote you, going to do this, like the internal audit. In fact, after working with Senator as Chief Internal Auditor, I decided not to work in any internal audit office again. Yes. Because the same person is going to promote you, and you can be head of department, but some of the boys around are higher in terms of salary than you. But that does not mean that you should just give in. No. Once it's not in the budget and it's not priority to the company and to, you should stick to your guns. Yes, sir.
In your presentation, you talk about aggressive stakeholder. But I don't know whether the accountants too are aggressive. The reason why I'm asking this question is that CA Ghana have an association. I don't know whether maybe accountant at maybe MTN, when it's working and there's difficulty, I don't know whether there's a channel they communicate to the executive that, oh, we are facing this particular problem. Maybe the board wants me to maybe pay maybe 300 million. It's a huge amount of money, but they say we should pay. In this situation, should they have to call to the executive to find out their opinion about the amount they are about to pay? Because now we were saying that...
They have to call IC executives.
Well, I want to know whether there's a channel they can call. Because now, you see the problem, they will come to your office and be finding out, this is happening, what is the accountant doing? But in my opinion, accountants are doing their work in their own corner without recourse to the general body when they face a bigger problem. So what that I'm saying is that doctors, they have what we call conference treatment. If they face a serious issue, they will call and they share the knowledge how to do the treatment. I don't know whether accountants will also have the same measure. That's the point.
Well, it's a good question, but the question is, you can do it individually. You have colleagues, but it's not the association who will tell you that do this or no. Recently, when we were going around, we went around and some people were saying that if accountants in organizations, they are having problems, they have to appeal to RCA to intervene. No, that's not our work. Our work is, to come out with a standard price which the accountants should charge, especially those in the practicing firm. But individual problems, if you are taking it to the association, I tell you, we can't bear it. So if there's a problem which you are facing, you can call your colleagues to share that idea, but it's not a matter of the association coming to your aid. You can seek advice from the association, all right, but that one is not a legal thing that can force the employer to do the right thing.
I already mentioned the organization's name. In one of my previous organizations, the conduct of the head of the entity was said that any external auditor who came in, I would have had a problem. On one such occasions, I just picked the phone, called Deputy Auditor General. In fact, just similar to our ICA body like this, Deputy Auditor General then talked to the head and said, this and this are going on, I'm aware. For the sake of professional conduct, don't disturb the young man. What he's saying is the right thing. In fact, my boss at the time never disturbed me on that line again. The woman saved me because he being the one to assess me at the end of the day, I knew where he was going to, turn me to. In fact, he had even given me a letter already in connection with it, and I still stuck to my guns that this one is too fraudulent, I wouldn't do it. We think ICA, we're not asking you to directly come in. But at least if you know that a member, the standards he's operating with, what he is advising on is professionally right, at least
you see,
find a way to come in.
Or ICANN, we act on complaints. If you complain to ICA that you are being maltreated in certain way, because of the association, we seek for the welfare of members. The question ICA will tell you is, we can write to the person, you see, especially when there's a dismissal, what do you call it, unfair dismissal, you can appeal to ICA to follow it up. But within the organization, how certain treatments, like a budget, is not in the budget, and they want you to pay, ICA can't do anything about it. But where there's unfair treatment, like unfair dismissal, and you appeal to ICA, ICA can intervene to find the reason why, you see, and that one, they can follow it. So it depends on the particular matter, you see. There are certain things too internal. Oh, we went to a place, accountants were complaining that they are being cheated in terms of salary. Some people are earning. I got a complaint. The foreigners who don't know Ghanaian context, when you are in a controller accountant general department and you qualified as a ICA, they transfer you to Ghana Revenue Authority payroll. You see, and they will pay you from Ghana Revenue Authority payroll, even though you are working at controller. If you are not transferred, you will be earning, let me go through, 2,800 Ghana cedis. But if you are transferred to the GRA payroll, not less than 8,000. You see, and this one, they want ICA to intervene. You see, those who are not being transferred to GRA so that they will be transferred. At times, it's very, very difficult. You see, and luckily, the luckiest aspect is that the controller is also part of the council. So informally, we inform him. But if you have to go through formal, if you are in a place where the salary is small and you are qualified, why don't you move out? You see, but to go and negotiate in terms of conditions is very difficult. So there are certain limits which the association or the institute can go, and there are certain limits we can't go. So I think you bear me out. Any other question, then you move on? Exactly.
Sorry, if you have a board, then you can report to the board before you go external. But I think from what I've seen in practice, you either fight or move out, because sometimes it's not worth working for some places. Otherwise, as a professional accountant, you'd, if you're dealing with a very unethical person, there is no limit for that person. So definitely, are you going to have fight number 1 to 10?
Yes.
You know, all the time you're fighting instead of working. So for me, I think you'd engage the advisor, the supervising entity of the person before going to the association.
Yeah, I think you understand it. If you are internally, you are being treated unfairly, you have a board. Apart from management, you can, the next step is to report to the board. So it's a good advice.
I like her suggestion in terms of reporting to the board. I've had a situation, I found myself in a similar case, and I reported to the board. The MD, who was an automatic member of the board, had been able to convince the chairman for whatever reasons. So I booked meeting with the board chairman. On the first occasion, he agreed. Subsequently, he didn't. He declined, oh, I'm having a meeting, and he never met me. So I perceived the MD had a hand in it, all things being equal. So invariably, the case I was fighting for, a typical case of where I was performing the role of a management accountant and a financial accountant. And I just brought the case that we should have a separate people doing the reporting, because the management accountant was to South Africa, which was the parent company. And that was taking a whole lot on me. But the MD who consulted the financial controller thought that I could do the same. And that was the tussle. Eventually, my complaint to the board didn't work, and I had to back out. So in most instances, when you weigh the pros and cons and you see it's not working, the best as an accountant is to back out. This is a typical case.
No, the process is there. You pass through the process. If the process will not work for you, then you leave. It's not easy to live anyway, but that is the circumstances, yes. Yeah. Okay, we finished with the qualities. We are now moving on to the role. The current role, or the modern role, 21st century role. The first thing is strategist accountant. That is the first modern role of accountant, is to be a strategist to the CEO. Wherever you are working, if the vice chancellor, if it is the secretary general, is also in the line of CEO. Strategy. The traditional definition of success for an accountant was reporting the numbers, managing the financial function, and being reactive to events. Accountants in the 21st century must be able to pick around corners. Therefore, they must be able to apply critical thinking skills along with financial acumen to the long. I mean, you have to be a strategist. And how many people, or how many of you has a strategic plan? You say that strategic plan is not prepared by accountants. It's not prepared by finance officers. True or false? You have to have your own strategic plan, which you can use to assist. You see, there's a difference between a strategic plan and then a budget. Budget is taken from where? The strategic plan. You have to plan in such a way that how things are done, whether there can be improvement. You want to improve profit. How do you get your revenue? You get your revenue through school fees. And school fees depends on the number of enrollment. So accountant, what are you doing to increase the enrollment? Is it part of your strategy or strategic plan? You will tell me that it's not part of your work. When the money comes, you receive them. You see, you want to increase profit. You are reducing costs. What are the procedures for you to reduce costs? They bring the voucher to you, then you cancel it. No. What are the procedures? Alternative way of suggesting other expenditures. Have you done it? And all these things should be part of your strategy. So as a strategist, you are going to assist management. It's one of the main duties accountants should do. It's not necessary you are going to just sit down. This is not a traditional one. The traditional one, I would say, a strategic plan is prepared by another department. But this time, your own department, you have a strategic plan. You look at the components of your financial statement. How are you going to improve profitability in the long run or surplus? Your revenue, how are you going to increase it? How are you going to reduce costs? The general and the administrative expenses are moving higher and higher. Some are variable, some are fixed. The fixed one is difficult, but you can still find a solution. The variable one, how are you bringing them down? You see, you are not at the top, but later you can do. What are you doing as a strategist to assist management? So if you look at the next one, the second row of the accountant, hand in hand with the first one, that is being a strategist. That is one of the leader implementing the strategies of the company. You are the leader. When it comes to implementation of strategies, you are the leader. As a result, it is no longer sufficient for accountant to sit back and analyze the effort of what? Others. Accountant as a leader, modern accountant must have tactical approach to problem solving and ability to facilitate congruous association between internal and external process and conditions. You are the implementer. You are leading for the implementation because you have a very good position to score goals. You see, you are accountant and you know what the insight, whether the company is financially sound or not, you know it. Liquidity is down. There is always a problem. You pile up vouchers. You can't pay. So what strategy are you going to use to mitigate or reduce some of these problems. You are just an accountant and you are waiting for money to come so that you can easily pay. You make yourself as only payment accountant. What strategy are you going by it so that you can improve the system? When there's a even strategic plan, the implementation, have you been able to go through whether you have been able to accomplish what's in the strategic plan? These are some of the questions you should ask ourselves. You've never even seen a strategic plan before, but you call yourself a chief operating officer, a chief finance officer. You call yourself financial controller. Just payment. When it comes to payment, especially when there's construction going on, that's where you are interested. So there should, there should be a strategic plan in place, and you prepare it, especially with your boss. And if you are at the top, your boss is either the vice chancellor or pro-chancellor or whoever, you report to. You have to sit down. You see, we at times undermine our position. You see, the position we are in now, very strong. I know a situation, vice chancellor has to beg before he gets what he wants, especially in his home or her home. You see, so all the time you see the vice chancellor is always pampering the finance officers, not because he's afraid of you, but because you want to get what you want. You have to go by the strategic plan. Strategic plan is for 5 years or 10 years. You can prepare it. Out of it, that you prepare your budget. Now that I was asking you, as at now, you haven't prepared your budget. If you have a strategic plan, you just take it from it and make one or two adjustments, and you get your budget. But you have a strategic plan, but always prepare a new one outside what? The plan. You prepare the budget outside the plan. The auditors, how many times have you even audited strategic plan? You think it's not audited? You haven't asked for it. Now, if you are in a company where you are rated internationally, these are one of the area requirements they need from you. Where is your strategic plan? Where is your budget? Then they go through the budget and see if it conforms with the strategic plan. What are you aiming for within 5 years? If you don't know where you want to get to and you are moving, where will you get to? You see, so your destination will not be known. So strategic plan is one of the modern roles which we accountants you have to play. Somebody will say that it's not part of my job description. No, you shouldn't be so static that what is given to us is what we are going by. If you like, do, as an example, go and prepare a strategic plan and give it to your boss, whether he will not be happy about it. Some of these bosses, they don't know. So it will be initiated by you, and they will accept it, and you go by it, educate them. Let's move on. Still on the strategic implementation, and then you move on to this developing this to back up the strategy, developing strategy, building resources and capabilities, and then implementing strategy. You develop the strategy, that strategic plan, and you make sure that the requirements for you to achieve the strategic goals, you look for it, and then implementation becomes easy. So the building resources and capabilities, you have the current assets, resources for you to achieve your strategic goals, as in a long-term productive assets, and then intangible assets. Now, the value of intangible assets are now becoming higher than the even tangible assets because of what? Technology. People have gone to a stage where even when you are rated, building like this, you see the very big. When it comes to risk base and you are valuing it, you just take 5% of the value. But when it comes to intellectuals, you have qualified accountants, you have computer specialists, you have this, you have this. The intangible one alone will be higher than this structure. That's how they assess performance. And you are rated according to A or B or C. It's not only edifice like this, no. So you see a very big man walking around, ask them what they do on daily basis, and they will tell you that you don't do anything. Because on paper, this is higher position, this is higher position, but in reality, they are not doing anything there. The small boy who is just sitting on laptop is doing more than the so-called management. So you have to make sure that the strategy is there. When you go to the office, you know what you are doing, and then you come out so that performance evaluation can be done. The next role is enterprise performance management. Enterprise performance management. Enterprise performance management is a type of business planning that relates to business intelligence, which involves evaluating and managing performance for enterprise to reach performance goals, enhance efficiency, and maximizes business process. The accountancy profession contribution to business resilience and success is through enterprise performance. You see, you have business analysis. You will do what you are going to do this week. After this, you do, not today, accountant and ethics, and then you do financial analysis. And then you see that financial analysis, you have to assess performance, the company as a whole, and then individually. You assess performance in terms of the company performance, profitability, liquidity, efficiency, and others. Do you do it? So you have management decision and management accounting system. The planning, you plan in the form of what? Budget. You plan, so your budget is a plan, or it's a statement. It's a plan. So the planning by way of budget, you control through accounting system, and then performance evaluation through performance what? Reports. So the first thing is, do you prepare a budget? Do you even have accounting system? Or you are still relying on Excel? Do you have a software? Do you prepare performance reports? If you have, you evaluate performance, then you have to prepare performance reports. If you have accounting system, then you should be able to control the system. If you have budget, you can't get budget without having what? Plan. So what is planning? So you have moving from strategic planning, strategic implementation, and then coming down to performance evaluation. And through performance evaluation, you come to planning. Planning is just setting goals, and then predicting results, decide how to attain the goals. So all these things should be part of your strategic plan. You set your goals, predicting results. If I set the goals, these are the goals I want to achieve. If I'm able to achieve, the results is what to come out, and then you try to come out how these goals can be achieved. So that is planning. So what is control? Because we have planning, control, and evaluation performance. So deciding and taking actions. Deciding on performance evaluation and feedback. That's the control aspect of it. Deciding and taking actions. Deciding on performance evaluation. You do performance evaluation and see whether you are negative or positive, and then you take action on any deviation, whether it's positive or negative on that deviation. And that is the control aspect of it. And then you have the budget, which we have discussed it already, expression of a proposed plan of action, the aid in the coordination and implementation of the plan. So, I want to say, what are performance reports? These are reports that compare actual with what? Budgeted amounts. Let's summarize them. You could see, you say the modern role of an accountant is to evaluate what? Performance. And how do you evaluate performance? You can evaluate performance when you have a plan in the form of budget. And then you can compare your actual with your budget. If there is any deviation, and that will indicate to you that you are in line with the budget or you are not in line with the budget, you need to take action so that even if it is positive, how are you going to improve it in future? So the plan is very, very critical to any accountant. That will help you to evaluate performance by comparing with the actuals. If there is any deviation or differences, that is where the control comes in. That is performance evaluation. You can also do it through traditional accounting system, where you have to measure it through ratios. Return on investment, you return on assets and others. That one too is a form of, but this is the modern one which you can evaluate and then take action on any deviation or any differences. The next role, accountant as a team leader. You've already mentioned that you are leaders, but you don't know. If you are managing cash, how can you be a leader? Cash is not everything, but cash is a leading product. So indeed, every accountant in the industry is a leader. Among other key functions performed, leaders motivate and get people to achieve targets or goals. Have you even set targets for your subordinates or even for yourself? This is one thing you have to know. Set targets for yourself. You know the work you do tomorrow. You don't know tomorrow, but you have to know the work you have to do. A simple way, when you are closing from work, just list the items which may come to your mind. Tomorrow, this is what I will do. List them so that when you come, you tackle them. If you remember something, you just add it. At the end of the day, you look at that sheet. This is a small evaluation. What have I done? The items are listed. Have I done even 2 out of 5? You could see that another accountant, at the end of the day, you'll be busy. You ask yourself, what have I done? Nil. I'm telling you the truth. I get to my office latest by 6:30 a.m. The work I will do from 6:30 to 8:30 before the people come is more than 8:30 to 6 o'clock. Somebody will just say, oh, I'm just passing by, I want to say hello to you. And then you come and sit before you. How the person will go out, only God knows. Another person come, and our system, you cannot just block the people, don't come. So, my secretary is always suffering. At times, just look at somebody's face, oh, boss, let's have mercy and then meet this man. He has been coming here. So, okay, let him come. Oh, Kwame, any problem? It's a long time. I want to say hello to you. And then the tension, especially Fridays. Friday afternoon, somebody wants to say hello to you. You know the meaning. Mm-hmm. So these are the problems you have been facing. But what can you do? You have to set goals for ourselves, whether you have problems or not. My goal, how I accomplish it, is to come to work early. So by 8 o'clock, I finish at least half of it, then start receiving visitors. Next, then another man goes. Next, like a medical house doctor. It's not easy. I'm joking, but that's practical. You see, meetings upon meetings. You go to a meeting, 3 hours. Meanwhile, no decision can be taken. If you don't go to, there's a problem. At times, you look at the sitting allowance, you have to go. Yes. So you can waste the whole week without you ask yourself what actually I did in this week. You can't know it. So why don't you set up the goals? At least if you are not able to perform what you have listed, you know that I could not do this. You just get up, be in traffic for 1 hour, go and sit down before you get there, and then you are even annoyed because the traffic itself, and then people will just come and worry you, then lunch, go for lunch, in 1 hour, then 4:35 you close, go and come. You are going to do this thing till the retirement. What a word we are. You see, so they are telling you that you are the leader. Try to motivate people and motivate yourself. Get people to work so that you can achieve what? Targets. Have you been doing it? And as a leader, financial leader too, you have a say how to motivate. Motivation, most of them is financial motivation. But even the way we talk to our subordinates is a kind of motivation you can give to them. Their involvement in the work, the way you give respect to them. And but there are so many ways of motivating. And of course, if they work to a certain level, if there's a need for you to pay something to motivate them, which is allowed, you do it. Every accountant, you have small power on small petty cash. So at least buying lunch for your staff once in a week, you should be able to do it. I mean, for them to work. You see, I'm not saying buying for yourself. There will be a problem. So you can buy it for, I mean, just to motivate them. The role of the accountant is that of a team leader to other employees, both inside and outside of the financial function. Not only will a coach call plays for a team, but they are also responsible for getting the highest results out of the talent on their team. See how to organize. You can have talented players like Manchester United, but you can't score. You see, so it's up to you to organize them, motivate them to achieve what? Results. An aspiring and successful coach will produce superior results by finding the strength of their team members and obtaining a higher level of performance than individual might achieve on their own. Bringing them, go congruence, bringing them together. At times, these young guys and young men, if you allow them to attend 1 or 2 courses outside, the little per diem, it will cost the company. When it comes and you are asking them to do the job, they will do it. Every course, then you are there. Every course you are there. Even the one meant for the small girls and small boys, you take over. You see, and when you come, even handkerchief you can't buy for them. You see, and immediately they are processing your document, then they are insulting you. You see, you don't know, but these are all not blessing. So let's try to motivate our subordinates so that they can also work to achieve their objectives. Any question up to this point? So far, the new role which you are expected to play, first you have to be a strategist to assist management. How to be a strategist? Look at the way we can improve to increase the performance, achieve the corporate objective, profitability. What is your role? You are in university, especially the private ones. They are really suffering in Ghana. The traditional universities, they are opening their wings. Tech, the small one Baptist universities are getting, you want to get them all. You see, not lowering the requirements, but the admission, they have opened it. So the private universities are suffering. So even a private university, as an accountant or finance officer, what are you going to do to improve the enrollment? It's not your job, it's part of your job. That's the strategy. Your salaries are very low because you rely on the fee. The fee is going down. And the legal aspect is that you don't reduce salaries. So you are forced to send some people home. As an accountant, what is your strategy? Do you have any alternative way of retaining the staff or increase their salary? Or the traditional way, school fees, school fees, school fees, school fees? These are some of the roles you have to play. When it comes to implementation, we can lead the implementation, motivate our employees, either in the form of financial or in the form of non-financial, so that we can achieve goals. You set goals for yourself. You don't set goals for yourself. How can you set goals for your subordinates? So let's set goals. To be a strategist, you have to get the goals and you'll be able to achieve it. You do performance evaluation. Always at the end, you even increase the pay before you allow the staff to fill the appraisal form. You know the people you promote. You know the people who increase their salary. So filling appraisal form is just a tradition. Have you really evaluated their performance? Because you don't evaluate your self-performance. How can you evaluate performance of others? And this is the role of a new and 21st century accountant. So let's go and drink tea and coffee and come back. And when we come back, okay.
The question I have here is that for us to actually even develop these strategies and also help management in implementing, one is that top management support is very, very essential. Yeah. And in this case, I think sometimes programs of this nature is always for accountants, auditors, and all the rest. And whenever these top management have opportunity of attending programs, probably these things are not also made known to them. And so some of them are still having that side that is the accountant. His work is to prepare and make payment. And so when you want to come up with some of these ideas, sometimes they look at it that you want to do everybody's job. You can imagine CEO may be having a meeting that is important, from where if you attend that meeting, you actually know where he's heading to. You cannot start planning in advance. But if you question, this type of question, meeting is taking place, you're not aware, you will ask you that we're not talking about money. It's only when it's only when it comes to payment that he will not let you know. And probably it may even be only when something is taking place and they're about making payment that it will be brought to your notice. So in this case now, how do you strategize? How do you work with, under such a condition?
But you discuss the challenges you are facing. But as you are saying, at times it's very true, and it depends on the relationship between you and your boss. Now from here, informal, you can explain what you did or what you learned or what you discuss here to your boss. Some of the bosses are very good listeners. Some will just snob you. But at least your relationship with your bosses should be cordial in such a way that you should be able to get access to explain things to her or to him. So if you are in a grudge with your boss, settle it and then make sure that everything you discuss with your boss and settings. But I also appeal to the organizers that it's not only accountant. Accountants should come with insurance. They will tell you that the finance officer should come with CEO. So always you move together. So if the CEO is here and you are explaining it to CEO, say, Oga, you've heard it too. You see, so it's a very good point. It's one of the challenges. But cordiality is one way you can interact and then sell this idea to your bosses. Some bosses are very good listeners. And if there's a good listener, you also take, if not all, you take part of your advice. Okay, let's move and go back.
Okay, so it's time for coffee, and then we have two. We have the tea section with the coffee, and then we have where we have the fruit juice and the like. So the choice is yours. We are going downstairs, and we are doing this in 30 minutes. And then we come back. So we can stretch within